Hello and welcome back. If this is your first time here, I am Dr. Stock, Doctor of Education. In this video, I want to talk about the impact that CPI and PPI had on the probability for the federal funds rate, what we could expect for the end of July, and look and see what exactly happened, and will we happen to move from where we're currently at with those probabilities for that rate increase, which right now is looking like a near certainty. Also about near certainties, in my last video, I had asked for you guys to weigh in on whether or not my new baby looked more like my wife or whether it looked more like the father, and we got some mixed results on that. So I did just want to share with you. Here's a wedding photo, so that way you know what my wife looks like. Let me hit that. There we go. So here's a picture of me and my wife on our wedding day. And, you can go back to my other video that I put up for CPI, my most recent video prior to this one. And you take a look at the baby and see if that resemblance is there. I mean, they at least have the same hair color and, quite a few wrinkles. So, take a look at it. Let me know what you think, and, hit me up down in the comments about that. And so let me move on from there. I do want to say that in this video, I will be featuring the Moomoo app, and I will show you at the end of this video, or towards the end of this video, how you can get up to 16 free stocks by using the link down in the description. Until then, let's go over to the CPI, because I did say that we would talk about that. So for the CPI, there we go, keep it right there. For the CPI, we actually had really good results for the CPI. So for all items we come across, came in at 3% for the year, 0.2% month over month, and that's a really good reading for us. Now you can see that there were better month over month values that we had. As a matter of fact, let me zoom in a little bit more so we can see it better. There we go. So now it should be more visible on your screen. So 0.1 in December, 0.5, 0.4, 0.1, 0.4, 0.1, 0.2. So that's with food and energy in, a little bit volatile. So if we go X food and energy, so let's go down here and I'll zoom out a little bit. There we go. All items less food and energy. We see all 0.4s, 0.5, some 0.4s. We actually dropped down to 0.2 when we look X food and energy. And I was like, that is incredible. Certainly, we got a drop in the probability for that rate hike from the Fed. So, we got a skip in June, if you want to call it that. Not a pause, but a skip. That's important to pay attention to that. And, will we see that happen for July? Well, when we look at the CME Fed Watch tool, you'll see that as of right now, it still says no, even though we got a pretty incredible report. And I know that one report does not make a trend. And trust me, I'm a mathematician, and I've do statistics myself, so I am sort of a statistician, even though not necessarily by trade, but by my efforts that I do for finance. And also I've taught statistics at the high school level, at the college level, and I'll tell you, like, I totally get that just one report does not make a trend, that really any good amount of statistics would come from bringing in as much information that you can to tell the best, well-rounded, fullest story possible. But I do believe that we're starting to see that trend move down for us, at least on a year-over-year value, and we're starting to see it the month-over-month as well. And I expect July, and I'll make another CPI video for July. As a matter of fact, I can put out that projection very soon. It'll be out first over at the Patreon. That link is down in the description if you want early access. Like I said, for Patreon, that's there. But CPI for June, probably also going to tell us good things. PCE more recently, June's PCE. I should say CPI for July. That'll come out in August. But PCE for June, that comes out after the FOMC meeting and after we get the rate decision. I also expect that to be pretty good as well. Now, then we also had producer prices. If we jump over to that one, and producer prices, so we had total final demand, 0.1%. Excellent. When we look on a year-over-year basis, 2.6%. Excellent. And you can actually look at the trend on that too. So I'll even zoom in some more so we can see it better. So there we go. So 6.4, 5.8, a couple 5.6s and 5.5, down to the 4s, down to the 3s, down to the 2s. I would say that we have a fairly good trend going on. So really, is the Fed going to keep on hiking rates up until we actually get down to that 2% that they're looking for? Like, how exactly low does it have to go? Now, PPI is forward-looking, the producer price index. So this could tell us a little bit more about what to expect from the PCE, and also give us a little bit of foreshadowing about CPI and PCE coming up for next month. Now, we also have the labor market to worry about. In that that's still showing a lot of strength there, a tight labor market, and the Fed said that they expect some softness. Honestly, I don't know that we'll see that softness happen really until 2024. So I don't know that we see it by the end of 2023. So the more I think about it and the more that I read about it, I think that the labor market's going to stay tight, and we'll see if we do get that softening. I think it's going to really come in the layoffs. I think it's really going to start hitting after the holiday season. We'll actually see if Christmas is that horrible time that people start to lose their jobs. I hope that's not the case, but we'll see that in possibly 2024. So let's move on. So we got two excellent reports in a row. It's still on trend with the fact that inflation is either moderating or dropping. It is not going back up. It is not resurging on us so far, and there's really no indicators to say that it's going to do that either, and that's important to pay attention to as well. So over here at the CME Fed Watch tool, this long, tall bar that you see, this is for 93% chance, so a near certainty that we get a rate hike at July's meeting on July the 26th. At 2 o'clock is when we'll find that out. 2:30 is when Jerome Powell will speak to us. Only 7% chance as per the bond market right now that we actually get a pause or another skip, if you will. Not to say pause, because Jerome Powell doesn't want to say pause, because when you read the Fed minutes, it says that there's another 2 rate hikes likely. So that's also important to keep in mind. So if you actually click on this button here that says compare, you can actually see still the darkest blue bar that we have here is the most current reading. So it says 92.38 for current. And if you go over to yesterday, 94%. So it actually dropped just a little bit, but not nearly as much as I would have expected for that to happen. So there's still that certainty in there. If we go back 1 week, we were still up in the 90s. And if we go back 1 month, there was only a 60% probability, which is still better than half a chance that we were going to get that rate hike. But compare that to what we had. There was almost 35% probability of a pause or another skip, if you will, for July a month ago. And fast forward 1 month, and now we're just floating around 7%. Now, there is something else that's interesting. If you go to the dot plot that we have for the FOMC participants' assessment of appropriate monetary policy. So this is where they see the federal funds rate being through 23, 24, 25, and longer run. I honestly think that they stopped projecting, or maybe they projected in a way that they made cool designs. So when I look at this, honestly, here's what I see. I see on this first one a spaceship. I see on this second one a pretty cool sword that kind of reminds me of Legend of Zelda. And then here I think they were going for a bowling pin. I think Michelle screwed it up. So if Michelle over at the Federal Reserve, if you don't like bowling, that's fine. Don't like bowling, but this is some high-class, high-quality artwork here, and you probably shouldn't mess with it. And then they have kind of this dragonfly over here. So I think that they really moved on. They're like, okay, well, let's get the medium projection where we think it's going to be, and let's see what cool designs we can make out of it. So I can look through the minutes some more and see if that's in there, or maybe we can even look through the summary of economic projections and see if there's any sort of commentary about making these cool patterns or not. But we'll watch and see if that's the case. So, back down to 92.4%. What do you know? So this thing updates all the time. It's always moving, although it hasn't moved much recently, just so you know. So let me go back to my pretty face that we have here. And we don't have the inflation reports really moving this off of its mark of, hey, there's going to be a 25 basis point hike. I do think that there's a possibility that we get some movement from it. And where I see that possibility of some movement happening is through bank earnings, and that tomorrow in the pre-market hours. So hopefully this video gets out to you in time. Hopefully you get to see this in time. If we hear stories of credit tightness, that access to credit has been restricted, that net interest income for banks is also something that's taken a hit with the competition that they have for interest rates over reserve notes, and that they're really struggling for deposits. If the banks come out with that sort of commentary, that could be something that not only could cause the markets to experience some downward pressure, and I don't know that it's going to happen. The banks, they'll take care of business, at least the big ones, when it comes to making sure that they at least do what they can to protect their shareholders on a quarter-over-quarter basis. So with that happening, if we get that credit tightness coming out, or we get maybe it's commercial real estate or something that they kind of give us a poor foreshadowing of what's to come for us on a forward-looking basis. Those are things that I think not only can affect the markets, which we're going to take a look at next, but I think that's also something that could impact the federal funds rate, because that credit tightness has already been said before that could be in lieu of further tightening. So if we have a credit tightness on top of further increases of the federal funds rate, that's sort of a double whammy that Jerome Powell said before when the whole banking crisis was taking place back in March. He said that we believe that the credit tightness that will come out of this will take some of the heat off of the interest rate hikes, or take the place of some hiking, that it would have some of the same effects. And I know that I'm paraphrasing, he said it better, but that's essentially what it comes down to. All right, let's jump over to Moomoo. There we are. And let's pop that down. All right, so what we're looking at here is QQQ, which tracks the NASDAQ 100. You can see this little tiny waviness that we had going on, and it was looking pretty bleak up until Friday, and then we kind of recovered a little bit Monday, Tuesday, and then Wednesday's CPI seemed to really save us, where we had a 1.26% jump, and then today with the PPI coming in and kicking about 1.7% up, even higher. And if we zoom out, things get really incredible for the Qs when we look at it, because the last peak to be overtaken, which was let me see here, zoom. All right, we are nearly dead even with what we have back here, and it's September of 2021, which is just over what we had going all the way back to March of 2022. So we're nearing that $400 value. What are we at right now? So it closed today almost at 380. We peaked at 404. That was the highest day, big old red candle. And that peaked for us on November 22nd of 2021. So we are nearing the peak of the market found the pandemic rally when we look at the NASDAQ. So that's absolutely incredible to see it make that run that it did. And we got to be careful watching how much it gaps up above its 50-day, because it tends to pull back towards the 50-day. As a matter of fact, if we toss up the Bollinger Bands, there we go. We actually broke back outside 2 standard deviations outside the mean of that. So that's also something to watch for, because we could get that pullback sometime soon. Now, let's go over to the SPY, because I think the SPY has more banks in it, so it's more closely related to the banking market. We're going to drop the Bollinger Bands. It's just too noisy to have it on there. I like to use the 50 and 200 day just as just sort of an initial view to see how things are performing. So for the SPY, which tracks the S&P 500, it has 2 peaks to go pretty much. We have this peak back here, which is March 29th of 2022. And then we also have the one back here. Let's zoom in a little bit to make sure I got it. That one is on January 4th of 2022. That really kicked off the downfall that we had here for the SPY. So 450.38 versus, there we go, put it back on that candle there for that closing price. So that closing price was 452. So we have 1 peak to go for the SPY. And I think what can ruin this little bit of rally that we have here could be bank earnings, or it could spurn the S&P on even further. So we're going to have to listen for the banks for what they say about credit lending standards. Maybe they'll give us some commentary on commercial real estate, commercial mortgage-backed securities. We want to listen for those things in the earnings report. So let me just show you this real quick. Let me jump back over to Chrome, and like I mentioned about the link that's down in the description, you get 16 free stocks. And by depositing $100 or more, you get 5 free stocks and $100 cash reward. So you pretty much get double the trading power from your initial deposit should you do that $100. $1,000, you get 15 free stocks, $100 cash reward. $5,000, you still get 15 free stocks, still the $100 cash reward, but also a share of Tesla or Google on top of it. And by the way, my Tesla earnings projection is available over at the Patreon. So that link is also down in the description if you want access to the exclusive offers, including my stock watch list that I have over there. I added 4 new stocks to that, and I posted about it today. I'll bring it to YouTube tomorrow for you guys, so you can check that out as well. And yeah, so let's move on from there. So here's the last thing that I wanted to show you, and that's the Moomoo on the mobile app that I have here. That is not Moomoo. That's me and my wife. Actually, that's Janet Yellen. Just in case you, I'm not married to Janet Yellen, by the way. That's not true. I barely know who she is. Like Like, oh, I don't know her personally at all, but I just know her from the news and from politics and all that kind of stuff. But I just thought it'd be funny to go along with the Jerome Powell baby face that I put in the other one. All right, so here's one I want to share with you. So in Moomoo, this is the mobile app that we're looking at here, because I know a lot of people will watch these videos on their phones or tablets or whatever. And if you get the mobile app, if you go to Explore and go to the Markets tab down at the bottom, here's what it has for you. So if you actually tap on the earnings reports, you get a calendar. And if you tap on the day, it will actually, well, they have calendars here. It will show you for that day all the different stocks that are all the different companies, I should say, that are reporting earnings. And then you can also read what it has for the previews, for the projections, for all that. So when we look at tomorrow, for example, there we go. We got JP Morgan, BlackRock, Citigroup, Wells Fargo's on here, all reporting tomorrow. And that would be an early forecast for us. And that means that we also have quite a few banks coming up next week as well. The big banks always seem to really kick off the earnings season in earnest. The time that those first quarterly earnings are not first quarter, but the earnings of the quarter that are most significant, at least to start off, to really set the tone for the rest of earnings season, at least for the banking sector, before the smaller companies get a chance to report. All right, so let me pop that down and let me wrap this up for you guys. So federal funds rate, still looking like another quarter percent raise, or 25 basis points, whatever it is that you want to call it, to the federal funds target rate. And I'm a little bit, I guess surprised would be the word that I would use. Honestly, I sort of have, the long shot call that we're going to get another skip. And, it's just a feeling at this point in time. I don't have anything to base it on, nothing really all that substantial. But I do believe that we're on the right track. The markets, I think, will go absolutely bonkers should we get another skip. And that could be the thing that takes the Qs, which I believe took over its previous peak. I think the only peak left is late 2021 peak, by the way, for the NASDAQ 100. When we look at QQQ, it's surpassed the second highest high that it's had. So I think that's pretty incredible. So in any case, there's only one more peak, one more, I guess maybe the Everest is making it to that last one. And pullbacks, by the way, are healthy to see on occasion, even if they're not fun to experience. They can renew some buying opportunities and stuff. Some people do protect their capital in different ways. So in any case, I think bank earnings could be that thing that moves the needle a little bit towards another skip, possibly for July, if anything. If we don't see any movement from that either, we'll go ahead and we'll count it as a certainty, or the darn nearest certainty that we're going to get, as far as certainty goes, with the markets and with anything finance and with anything trying to tell the future. I have my magic 8 ball is still, hold on, I'm still terrible at pointing. Looking at the camera here, it's right back there. Actually, if I just think about where it is on the shelf, it's back behind me, over my left shoulder. So thank you guys for watching this video. Take advantage of those free stocks for Moomoo. Not only are you getting access to a wonderful trading app, you see it in my videos, it's also cross platforms, so desktop, mobile, Mac, PC, you name it, it's Android, iOS, whatever. You also get your free stocks that are in there as well, so you're getting instant returns just by signing up and doing the deposit using my link. And then if you want further value from this channel, you can find that using the link for the Patreon down in the description, where you get access to my exclusive content, which includes, like I said, my Tesla earnings projection that I have. Tesla earnings, by the way, are July the 19th, so that's already up there. I also put up my CPI projection up there as well. It goes up there before it shows up on YouTube, and then also my watch list of stocks, which only exists on the Patreon. And then you can also talk to me directly, more in a live sense than you can through YouTube comments, by doing it through the private Discord that's also available through that. So I saved the plugs for the end, because if you watch the end, you're probably part of my more dedicated following. And so thank you guys very much for watching this. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, learning is earning.